This is a banking crisis, and this is bad. It's so bad that Thomas Massie, a representative in the U.S. House of Congress, tweeted, "Just got off a Zoom meeting with the Fed, Treasury, FDIC, House, and Senate." A Democrat senator essentially asked whether there was a program in place to censor information on social media that could lead to a run on the banks. Wow. And someone tweeted back, "I'm as anti-censorship as it gets, but spreading unfounded rumors to promote a run on a bank is one of the very few instances where the yelling fire in a crowded theater analogy actually does apply." To which Representative Thomas Massie replied, "What about yelling fire in a theater that's on fire? Yikes." It's so bad that this past Sunday, the Federal Reserve got out of bed to bail out Silicon Valley Bank. The last time the Federal Reserve got out of bed on a Sunday to do anything was during the pandemic in March 2020, when they U-turned and cut interest rates by 2% on a Sunday. It's so bad that first thing Monday morning, the very next day, President Joe Biden got out of bed to address the nation to deliver a speech that lasted from 9 a.m. to 9:05 a.m. Biden's 5-minute everything is fine narrative is completely false. His claims that no losses will be borne by the taxpayers in the Silicon Valley Bank bailout is also completely false. Increasing fees across the banking system creates a loss for taxpayers because those fees will be passed through the banks to its customers, the taxpayers, and the Treasury Exchange Stabilization Fund that backstops the BTFP bailout facility that the Federal Reserve is using to bail out Silicon Valley Bank is funded by taxpayers. The government is raising Silicon Valley Bank's employees' wages by 50% for the next 45 days to help wind down the bank. And who's paying for that? Absolutely the taxpayers. The money printers are firing up again, further diluting and devaluing the US dollar via inflation, which is legalized theft that violates the property rights of who? Absolutely the taxpayers. So this is absolutely another taxpayer bailout, and the government does not want to use the word bailout because they don't want us to know it's a bailout to avoid pissing off voters before an election year. The US government is trying to censor facts and information from US citizens, and they are outright lying to US citizens. Meanwhile, at the market open on Monday, the largest stock sector halting in history occurred as multiple US regional banks were frozen from stock trading. Why is it so? Was this all by design? Well, the Federal Reserve, the United States government, and regulators seem to be on a mission to centralize the national banking system as much as possible by destroying small and mid-sized regional banks to force everyone to use their upcoming central bank digital currency, or CBDC. Hello, I'm Crypto Casey, and in this video, we are going to explore what the US Central Bank is potentially trying to orchestrate to execute one of the most heinous power grabs in US history. Let's hit it. Please check out our sponsors CoinLedger, NordVPN, and Ledger. Start getting your crypto taxes sorted out with CoinLedger's cryptocurrency and NFT tax software that will save you time and maximize your refund. Secure your data privacy and access to important financial and cryptocurrency accounts from hackers and trackers by using virtual private network services provided by NordVPN, which we can redeem a special discount with the links below. And make sure you are taking complete control and ownership of all your digital assets and cryptocurrencies by using secure cold storage hardware wallets like Ledger devices. So make sure to scroll down and use the links below to access the correct and official sites, as well as redeem any special offers they have for us. Sweet. So we already know there is a coordinated effort by the central bank, government, and regulators in the United States to sever connections between the cryptocurrency market and the traditional financial system. It's called Operation Choke Point 2.0, and we explore it together in this video you can check out by clicking on the link above. And more progress was made this week, mid-March 2023. Crypto is being debanked. What it means for Bitcoin and the industry. The closure of Signature Bank by regulators on Sunday effectively shut off one of the last easy options for crypto firms to stay connected to the traditional finance system. It closely followed the collapse of crypto-friendly Silvergate Capital and Silicon Valley Bank, which catered to startups including digital asset firms. So the top 3 largest crypto banks in the US are now gone, which means no major on-ramps for fiat to the crypto industry remain in the US. Lame. But is their ultimate goal much more sinister than stifling crypto and involve bringing the traditional financial system as we know it to an end to usher in a new Orwellian system where they have complete control over every single transaction that happens in the US and all of the money at large? It's possible. And why would they do it? Power and greed. See, a central bank, in a nutshell, is a perpetual profit-generating machine that never sustains any losses. But that's not enough for them anymore. They don't want us to have the ability to transact with cash or have greater access to financial assets and services via small and mid-sized banks that are more customer-centric and inclusive. They don't want us transacting on neutral financial infrastructure that no one person, corporation, government entity, or any central authority controls, like Bitcoin. What they want is for us to use money that they control and that they can program to function however they want. How could they achieve this goal? By continuing to increase interest rates to create massive systemic bank failures, to cause panic and instill fear in people, all so they can pretend to swoop in and save the day. Let's break down this idea together. Here's the deal. When we deposit our money into banks, we are unknowingly giving an unsecured loan to a heavily leveraged borrower, the banks. Because they don't keep our cash there. They loan it out to other people or businesses, and they invest it in other assets. The most common asset being long-term US Treasury bonds, which a lot of banks invested in a few years back when interest rates were zero and yield was around 1.5% profit for them. Now, with interest rates increasing aggressively at frequencies the market hasn't experienced in several decades, all of the bank's US Treasury bonds are currently worth a lot less than when they originally invested. So they are sitting on massive losses. So when a lot of depositors need to withdraw a lot of money, they are forced to sell their assets at a loss. And if a large amount of withdrawals happen all at once, like what we saw with Silicon Valley Bank, they go insolvent and collapse. Bank runs are starting. Trust in banks, small and large, is deteriorating, and it will accelerate quickly due to this digital age we live in with instantaneous communication of news and events. That's why Silicon Valley Bank, one of the US's top 20 largest banks, collapsed in a mere 48 hours. And consider over the past year or so, the Federal Reserve has been preparing to launch its central bank digital currency and their FedNow payment system around May or June of 2023. Is it just a coincidence? Or are they trying to time it perfectly so it will be an easy pitch to the masses to drive faster adoption? Because as people start losing trust in keeping their money in bank accounts, the more ideal an account between them and the Federal Reserve directly sounds. And it will allow them to make near-instant transactions very cheaply with their central bank digital currency. And if the Federal Reserve and the US government are successful in forcing us all to use only their FedNow central bank digital currency to transact in our country, we will no longer have hardly any control over our US dollars and effectively have no privacy. Because they will have the ability to restrict your access to your money, to freeze all of your accounts if you speak out against or rival their agendas. You will have zero privacy with how you choose to spend your money. They can impose geographic spending limits. Before your paycheck hits your account, they can take out your parking tickets, child support, student loans, alimony, and any government fines, leaving you with whatever's left over, which could be nothing. Our lives, liberties, and property are in jeopardy, and we all need to do our part to spread awareness by sharing videos like this and having discussions about the topics we cover in this video, as it may be our only opportunity to build a better future for ourselves. So if you would like to learn more about the implications of the Federal Reserve successfully enforcing the use of their CBDC or central bank digital currency, check out this video by clicking on the link above. Cool. Next, let's discuss why the survival of small and medium-sized local and regional banks are so important for us and why the Federal Reserve and big banks want to buy them up, consolidate, and further centralize the US financial system. Smaller banks are crucial because they offer individuals like us several benefits over big central banks, like lower fees that help us save money over time, personalized services that help us find the best solutions for our financial needs, flexible loan decision-making processes that help us get access to capital we otherwise wouldn't qualify for with bigger banks, quicker loan application processing, more competitive interest rates, less bureaucracy, better understanding of our local markets, and better support for our local economy. Also, smaller banks actually help the economy at large grow by giving small local businesses capital in a way that does not create inflation. Because these types of loans create jobs, foster innovation. As technology gets better, things become cheaper over time. And it generally gives us everything we want in society without all the negatives. Here's how it works. When smaller local banks provide credit to people and businesses only for productive purposes, like lending to small businesses for business investments, implementation of new technologies, expanding the business, hiring new employees, and overall increase of productivity, it stimulates healthy growth of the local communities. And when done across the country, it stimulates healthy growth of the entire US economy and more of a capitalistic economy overall. When a country just has one central bank and maybe a few big banks, It makes it difficult for the country to thrive and flourish because a vast majority of people and businesses have significantly less access to capital, which has an extremely negative effect on the economy and GDP. And lack of local knowledge about a community, coupled with higher rates, generalized versus personalized services, rigid loan decision-making standards, lengthy loan application processes, more bureaucracy, and virtually no incentive to support individuals in their local communities would further destroy the already deteriorating United States society, all for the benefit of a few greedy, powerful central bankers, bureaucrats, and big businesses that want complete control over every citizen and every dollar we earn by trading our precious time and energy working, trying to actually create value in the world. Central banks tend to distribute money unequally throughout the economy by giving it first to their corporate cronies and politicians, which is a key driver of injustices in our society, because it gives them an advantage to invest in assets before they rise in price through arbitrage opportunities. This creates asset bubbles and does not drive innovation or help the economy grow. The unequal distribution of money in our current fiat systems benefits those closest to the government and harms those farthest from the government, in a phenomenon known as the Kantian effect. And if you would like to learn more about how central banks and governments keep us poor on purpose, check out this video guide by clicking on the link above. Another major reason why the United States society is failing is due to a legal concept called corporate personhood, where corporations are granted more rights than humans. And with these advantages, they are able to buy politicians, to buy favorable regulatory environments in order to buy our attention via controlling the media, to ultimately keep us poor via materialism and consumerism. To learn more about corporate personhood and its effect on our economy, check out this video by clicking on the link above. Nice. So does the Federal Reserve and government at large have a secret plan they are executing in order to successfully roll out a central bank digital currency to effectively enslave us all? It's possible. And if they choose to continue increasing interest rates, it will result in more bank failures, bigger banks buying out smaller ones, mass consolidation and centralization of the US banking system, obstructing access to capital for the vast majority of people and businesses around the country, all to execute one of the most heinous power grabs in US history. Either way, more bank failures are likely to come. And something extremely important to keep in mind is that hackers and scammers love to exploit events like the collapse of Silvergate, Silicon Valley Bank, and more by sending out emails, texts, and all kinds of messages pretending that your accounts or similar have been compromised. They try to get you to send them information about yourself, your usernames, passwords, two-factor authentication, wallet seed phrases, private keys, etc. Or sometimes they say you owe fees or need to send them money or crypto to retrieve your funds or protect your funds or similar. They also set up fake websites to look the same as your bank, crypto exchange, or similar to try and steal your login credentials. And when we panic, we tend to freak out and try to act quickly, and that substantially increases our chance of being scammed. So make sure when we are looking to make some moves to protect our funds and digital assets to always stay calm, go slowly and carefully, and always double and triple check website URLs. And to protect us and our wallets when transacting online, there's a free browser extension currently in beta called Wallet Guard that acts as a security companion to our crypto wallet of choice, so we can browse the internet and interact with Web3 more securely. I've been using it over the past month and it's been working great so far, popping up warnings, helping check everything out before transacting, so it's definitely worth checking out and giving it a go in this crazy macro environment. Wallet Guard uses machine learning algorithms to detect phishing before a scammer can get access to your crypto assets. In their most recent update, the app now offers multi-layer protection services for our wallets. When interacting with smart contracts, like for minting NFTs, when accessing the site, Wallet Guard's phishing protection layer executes and warns you if the website might be harmful, if it was created recently, if it has low trust, and if you proceed to do so with caution. And when we do, before attempting to verify a transaction with our wallet, a second layer of protection is executed with a clear, human-readable warning about what exactly will happen if you decide to proceed with the transaction, like if it's going to drain your wallet instead of actually mint an NFT. It can also detect and will notify you if the site is making multiple attempts to interact with your wallet, trying to hack and steal your funds. So Wallet Guard is basically an all-in-one security dashboard for Web3. So make sure to scroll down and use the link below to access the correct and official site to download Wallet Guard's free extension to protect your wallet and crypto assets today. Awesome. So if you would like to learn more about how Bitcoin works and why its revolutionary technology can help us maintain power over some of our wealth, check out this video. If you would like to finally have that eureka moment about how cryptocurrency wallets, seed phrases, and private keys work, so you feel more comfortable as an investor, check out this video. And to download WalletGuard's free browser extension app to protect your wallets, check out this link on the screen. Like and subscribe for more. Be safe out there.